Hey, the recording has started. Hi, everybody. It's Uncle Bruce here from Tokyo. Welcome, one and all. Sorry about the glare on the top of my head here. I've got a light in front of me here, and it's the best I got. If I look like this, it won't glare, but then I'm way back here where Mount Fuji is. You just can't win. How you doing, everybody? It's August the 20th here in Tokyo, 2025, but it's August 19th where my American friends are, uh, and we're about to open in the market. The market is about to open in a few hours today for Tuesday, August the 19th, 2025. So welcome all of you to the show. I'm on a bit of a holiday here. Just got back from Osaka. Everything is great. Back here in Tokyo for a couple days, and then I'm heading to Singapore on my round the world journey. I wanted to talk to you today about a couple things. Noticed just a while ago, this morning came out that JP Morgan has increased the target price for SOFI shares. They have bumped it to $24 from $22. Now, I know many of you who watch me have watched me now for several years. You cannot believe that I'm telling you that JP Morgan has just called the stock a $24 stock. When we were buying it, or I was talking to you folks about buying up this stock at $6, $7, and $8 a share just a year ago, after 2 years of telling you to buy it from $4, $5, $6, $7, $8 a share for since 2021. But here we are, 2025. This company is on fire. SoFi is really raking in new members. It's almost 10,000 new members a day now at this pace. Earnings are growing, cash flow is growing, sales are growing. I mean, this bank is rolling. The folks at JP Morgan put a hold rating on the stock because the stock is, 22 to 24 now. So there you go. Yesterday, unfortunately, the shares lost $1.48 on the session to close at 22.75. However, got to look at it this way. If you didn't write your January 2027 $25 cash secured puts and you kind of put it off for a while, maybe today is the day to do that, because you might get $7 a contract today for a while. I don't know how long this is going to last. I don't know if the shares will go any lower than this. Will they go higher than this? But if you can get $7 for a $25 put contract where you're offering to buy the stock for $18 until January 27, a year and a half, year and 5 months anyway. I think that's a pretty good take. I would take $7 on a $2,500 commitment. You put up $2,500, you get $700 back right now. You got $3,200 in your account for every contract you write. I don't know what's wrong with this deal. Obviously, if the shares want to inch their way to $25, $26 in the next month or so, keeping in mind that this is August the 20th, which means we are 50 days into the third quarter, which is a 90-day quarter. We have 40 days left, and that's the end of the third quarter. 30 days after that, they come out with their announcement on how much money they made in the third quarter. And don't you think they're going to exceed expectations again? I do. So could the shares be in the 25 to 30 neighborhood by the time the earnings come out in October? Yeah, they sure could. And these $7 cash secured puts might be sitting at $2.50 to $3, which would be a lovely position for you to be in if you want to buy them back there and then go ahead and write $30 cash secured puts for Jan 2027. A lovely little rollover at that time. Right now, if you write it at $7 with the stock at around 22.70, the contracts are only worth $2.30 in book value. You're getting $7. You're getting $4.30 in premium, time premium. This is August 20, so September 20, October 20, November 20, December 20. That's 4 months. And then January 16th, whatever. So in less than 5 months, these contracts will expire. They will run out of time. Now, they'll either be worth $2.30 if the stock is sitting where it is now, and you're getting 7 for them. I call that a win. Obviously, if the shares would like to go to $25.01, those contracts have absolutely no value whatsoever. So they're going to go to zero. You decide where to take the exit ramp. Do you buy them back at 2.5, 2.25, 175, and right up 30s or higher? You decide what you want to do. Don't be surprised if in the next couple of weeks, additional firms will do what JP Morgan just did today. They'll come up with new target prices, which will be lifted from the 20 level, 18 level higher. Yeah, we know there's an idiot or two still out there that are calling the stock, an $8 stock or a $10 stock or a $12. Ignore those people. They're completely, obviously wrong. But don't be surprised if more major firms upgrade the stock target price into the mid-20s. Interesting stuff. Something else that I wanted to show you. I'll quickly pop this up, by the way, while I'm just thinking about it. Here is the quote, or here's the chart for the last week now for SOFI. So you can tell here, just I guess above my finger, right up there. Thursday last week, it was over 24, slumped into the 22.5 level on Friday, then rebounded right back on Monday, almost to 24.20, something like that. And here we are again at 22.66. The high of the year, 25.11, and it's only a matter of time when this gets breached. So that's going to happen. Now, something else I wanted to bring up today for you. A number of you out there are writing call credit spreads on triple Qs and on SPYs, and probably a bunch of stocks out there, and you might be becoming rewarded right now. You might be getting rewarded finally because you sure deserve it. Notice how the Qs here in the last week, from last Wednesday, Thursday, you notice how they were in that 580 level, the high of the year, which is way over here on the end at 583.32. Well, we're a long way from 583.32, aren't we? It's nice to see it back to this 568 level. We're even lower this morning in the pre-market. Could this index get back into the 560, 550 range? Yeah, sure can. Take a look at this chart here. This is just a little bit of a longer range. This is a 1 month range for the last 30 odd days. So you can see here in July, we started off with this chart somewhere just over 560, got just under 570, did collapse down into the 555 level, then back to the 560 level, and then of course it took the run, $23 run to 583, and now here we are, $15 below the high. And there's no question that the Qs could certainly lose ground from here. Could they stage an immediate rally the other direction? Maybe. Will they? Well, that's the proverbial question. I don't know if they will. This morning's futures, just so you know, with now, what time have we got here? We're at about 6:29 Eastern time, so we're 3 hours away from the opening. We're down 51 on the Dow, 550 lower on S&P, and 29 points lower on NASDAQ. So it's not a bloodbath pre-market, nothing like that. It's just a little weaker. And the right stocks are backing off right now to make these indexes lower. The stocks that are backing off are the Magnificent Sevens because they've had a wonderful time of it. And the news is out. They posted their earnings except for NVIDIA. Everyone's posted their numbers. There's no new numbers to look for. And so the question here going forward is, are we going to give up a little more ground into the 555 level? Putting some of you who have long-dated call credit spreads out there. I know some of you are doing rollovers. You were rolling over into the 580, 590, even the 600 area for the Qs. Now you're a lot more comfortable sitting at 568, maybe even more comfortable at 555. You may begin to note again, after another week or so, give it some time to really kick in. If we hang around 550, 560, you might roll back from 600 to 580s or 585s, but don't be in a rush to do so. Let the time crank destroy those values of those contracts. Time is your friend. It's the kryptonite against these options. And if the index wants to drop off some more, it drops off some more. Obviously, if you have another day like we had yesterday, if we get an 8 or a 10 or a $12 drop in one session on Qs, where we're down to 550, 555, 552, even something like that, well, then, of course, a number of you out there will have options that will have really significantly backed off. If they're worthless, you take your money and run, of course, and reposition yourself into a new trade. But if you've gone out a month or 2 or 3 on roll-ups, rollovers, and you've been involved in contracts that were 590s to 600s and beyond, those contracts will really back off in price, of course, dramatically. Now, the question is the spread, and that's what you're going to watch very carefully when you find it's in your best interest to consider closing out the spread. In the meantime, for those of you who are just doing day trades, you're trading Qs on a daily basis, on a double 2-day expiry, 3-day expiry, 1-week expiry. Always be mindful. If you can go up 3, 4, 5 days and you can be $10 ahead of this market, in that range at least, that's where you want to be. So today, with a 568, 569 range, if we open up weak or flat, or in the first hour we don't have much of a spike, or even if we do have a bit of a spike, get a $2 or $3 recovery, you still want to look at something $6, $8, $10 ahead, 3 or 5 days out from now, up to that range. Just that's my thought on it, and you decide for yourself whether you want to make that kind of a move or not. Congratulations out there, option writers. You're sitting on cash secured puts for GameStop. You noticed yesterday GameStop didn't drop very much. The market had a lousy day, but GameStop yesterday lost 29 cents. Like, so what? They're sitting on $9 billion cash. They're not going anywhere, not going lower. Rocket Lab seems to be finding a floor in the 40 level and then tries to go to the 45, 50 level on these incredible spikes. We'll see. They've come up with more news in the last couple of days. Apparently, they took over another company's assets, and they're firing now newer rockets that can go, much higher payloads and this sort of stuff. They're sending up their 70th Electron mission, and they're going to deploy 5 satellites for a confidential customer. I think that means military, and those pay very, very well indeed. So we'll have to watch. We'll watch that. Again, cash secured puts on Rocket Lab. Nothing wrong with that. Cash secured puts on AI. Long term, good move. 15s, 17s, 20s. I think you can write those. ASTS, I like that one. Cash secured puts over there. There you go, kids. There's a couple thoughts from yours truly on the road here from Tokyo. Hope you're all doing well out there and making nothing but money. Thank you for all your kind words and comments and support. It's just terrific. We love you guys. We'll keep you posted on how the market is doing. We'll stay on it. Throw the thumbs up out there if you can. Hit us with a thumbs up today. And we'll talk to you again in a few days from probably Singapore, unless something incredibly dramatic happens in the next 24 hours. But all the best to all of you from Uncle Bruce here at Stock Markets with Bruce. Thanks again. We'll talk to you soon, everybody. Bye for now.